Alrighty there. Well, hello everyone. Good evening. We are here getting started. Miss Valencia is going to be in and on her way. How's everybody doing this evening?
Good.
Amazing.
Awesome. It's good to hear. We are here again at 7 p.m. on a good Monday for Smart Money News and Business Reviews, hosted by Miss Valencia Brodus and me, Bree Logan. We have our wonderful professionals here today. I'd like to go ahead and open up the floor for them to introduce themselves while our main lady of the attraction is on her way in. If we could start with Mr. Alfred there.
Hi, my name is Alfred Jordan. I'm the owner of Jordan Law LLC. I'm a business lawyer. Um, Happy to be here.
Awesome. Thank you, Mr. Whitney.
Whitney Morgan, owner of Empowerment Solutions, LLC, personal credit, business credit. Let's talk about your credit. That's me.
Amen. All right, looks like she's making her way and we're doing our connection. Um Just waiting for her to come on in here, guys. We're so excited and super happy that you guys have made it in again this week. Thank you so much to our professionals for coming on in and talking to us. We have a very interesting topic to discuss this week, so you guys stay tuned. Right now, we're going with God's will. We need to connect this audio.
I have it's a very timely topic for myself too. So,
Perfect.
yeah. So I won't reveal it out of order, but it was a very
Okay.
interesting coincidence with a meeting I set up for tomorrow. So I can get some
Awesome.
pointers myself.
We love Yes, sir. All right. Well, the good thing is we have a good list of professionals here on the panel today that we'll all share our knowledge and our experiences. I'm quite excited by that.
Second.
Hello, hello.
Hello there.
Hello. Can you guys hear me?
Yep.
All right.
Yes, sir.
See if I can get this on
Okay.
my phone. There we go. Testing everything.
Got it. Got it. Okay. Thank you. It's doing that weird stuff again. Miss Paris told me. Hold on. Okay. Hi.
I got
Everybody.
something for you on that offline, Miss V.
Okay, thank you. Because it keeps doing
Happened to
it.
me.
Bad, bad, bad. Hello, everybody. How are you today?
Doing great. How are
Good.
you?
Good.
Wonderful.
Doing great, doing great. Okay, I just want to say welcome everybody to Smart Money News and Business Reviews. And we've got some exciting things to kind of talk about here. We got a full team on deck again, and this is always exciting. Mr. Walker, hello, how are you today? And whenever you're ready, y'all tell us about KUAW. Just to kick us off before I introduce everybody else, please. Mr. Walker, Miss Paris, who we got there?
Hello,
Excellent.
everybody.
And making things happen. Thank you. Thank you. Hi, Miss Paris. How are you?
No, that's how we can stream out. We're doing pretty good around these parts, you know. Thank you all for joining in today on KUAW, Smart Money News and Business Reviews. Um, we are streaming on KUAW.org, Facebook, Twitter, Twitch, and all that lovely, great stuff. Find us on our YouTube as well. Um, we're happy to be here, and sorry for the delay, but we're ready to get you guys going.
You're great. You sound good, Miss Paris. Y'all doing good stuff over there. So it is Women's Month, and we do have, of course, a couple of awesome women on the show, but also you awesome young men have awesome women that support you and back you up and all that. So really happy month to everyone, to all of us on that. I mean, our families and etc. We also, though, we have a young man's going to tell us a little bit about an event coming up, and because something he shared with me, and I really appreciate it. And so, just to we'll get into that a little bit, but with it being Women's Month, there's so much going on all right here in our cities, Kansas City Mo, Kansas City K, Blue Springs, Lee Summit, everywhere. Really celebrating all of us. So we want to just make sure that we're giving you information that's being shared with us by our business leaders regarding tips and tools that are happening in the community to help us all to get better at this journey that we're on. So, Miss Bree, how you doing today?
Doing good. We're living the dream and quite excited. It's been a very eventful Monday, but I'm super excited for Smart Money News and Business Reviews tonight.
Okay, good. So I have a scenario. This is the first time Miss Bree and I, once you brought us, Miss Bree, and everyone introduce yourselves in a moment. We have a scenario that we're going to try on tonight. We thought that because we all have different perspectives on different scenarios in our own lives, we thought we would try this one this week that'll kind of bring everything back home to a news article that we read. And Mr. Alfred's going to feel like law school, but we're not doing that. We're just trying to get a fact pattern out there. Miss Bree, can you share it with us? Tell us what you got for us to be thinking about.
Yes, ma'am. So a lot of folks are kind of going in the direction on, or thinking about going in the direction of owning a home. And I believe the question that we kind of proposed is, is it the time to make that decision to move forward, or as you're kind of looking at your different options, should you then maybe focus in on making more money and bringing in more income? So I think we're kind of cover that scenario today, right?
Absolutely. So here's a scenario. I'm gonna be your homeowner, and this will be interesting. So I saw a house for $150,000, and I went to this mortgage calculator, and it told me that if I do $150,000 home, and it's what I need, $150,000, a conventional loan, and with that conventional loan, it said I'd have to put down 20%. Right now, I have in my bank account right now $2,200. And they told me that, I mean, my score is a 620 in our scenario. And it said that basically with that, I could probably, kind of squeeze into this conventional loan. And so what Ms. Bree and I were talking about from the article, we'll get into that in just a moment, is, based on me getting the house, I think I can afford the payment because I make $2,500 a month. And if I go ahead and do this conventional loan, then my payment would only be $1,057, a little less than half of my income, right? And so it's but should I do it? And so I'm gonna go back over just a little bit again, and I should have sent y'all the scenario. We were so excited, we were just talking about it, And so it's like the house, 150,000 K, conventional loan, 20% is gonna be needed, wherever that's gonna come from. I do have only $2,200 in savings. If I get this conventional loan, I can make that mortgage of $1,057. Should I do it? Like, what do y'all think? Talk to me, Mr. Alfred. Talk to me.
Yeah. So my first question is the 2,500 your gross income, or is that net income?
That's my gross income.
Okay. So yeah.
Why do you ask? And Mr. Whitney, I want you to talk to us.
Because Mr. Jordan's already going to say a no, because your net is obviously Uncle Sam's going to get his piece of that 2,500, and then your 1,057 mortgage it's going to be a very high debt to income ratio. It's going to be more than half of what you're bringing in. We haven't even talked about it. Do you have student loan payments? Do you have auto loan payments? Do you have electricity bill? The other types of debt that are coming in. So you You may be able to afford it by the skin of your teeth with $5 to get McDonald's when you're done. That's about it. I wouldn't recommend it.
You would
You're gonna be
recommend it?
you're gonna be house poor.
House poor. What's house poor mean? What's that?
That's what we call house poor. You're just gonna barely be able to afford the house payment, and that's about it. So, and you're like Whitney said, your income to debt ratio. We haven't looked at your income to debt ratio to bring that into the analogy to look at it from that perspective also. So, I would say no.
You would say no.
If you
So, Miss
sneeze
Bree, what you
wrong,
think? You're my realtor. No, go ahead, Mr. Whitney, and then we'll bring Miss Bree in. Go ahead.
I was just saying, if you sneeze wrong, you're gonna get foreclosed on. So
Exactly.
Yes. Yes, I'm gonna get foreclosed on. And there are no moratoriums right now. So ain't nobody gonna save me because that happened, with a lot of people. Miss Bree, give us a thought, and then I want us to introduce ourselves and go back in. But I wanted to start there and then have a little bit more of a discussion about why I even brought this up.
I mean, well, I'm just going to go along with all the other gentlemen there. Yes, ma'am. When you're talking about your gross at $2,200 or $2,400 a month, that's just not going to leave you a whole lot of space. And that's kind of where I make sure that my clients get an understanding that you got to look at what you have first, make the best decision for your family, and then move accordingly. So I think we have to wait a little bit, but find some more money.
So, I mean, but like, let's just say if I made $3,500 a month, let's just say, so I made a little bit more, and I still only have $2,200 in savings, and I probably, well, where am I going to get? What's that 20% of 150,000? $30,000.
Haven't thought about that yet.
I was gonna ask about that because, and I'm
He's
gonna
like,
say
no.
I'm gonna say you need another mortgage product because 20%. I mean, you should be able to. I'm not saying you have to do this, but like you should be able to get by with 5% on a home loan, shouldn't you? I mean, Bree would know way better than me, but if everyone has to be 20%, I'm gonna have some personal problems here in a little bit in my search.
And so, but there's a reason people do conventional loans rather than some of the other ones. Like, why do we try to do that sometimes? Miss Bree, anyway, based on just what you know.
Yes, ma'am. Okay, so with the main determinant for me between people going for FHA or conventional, the benefit is not having to come up with a 20% down unless you have a lender that is pre-approving conventional loans at either 3.5 or 5% down. But one big thing that would be helpful is not having the PMI with a conventional loan like you would assume with an FHA loan. Sometimes that PMI can have an impact on your debt to income ratio and maybe even push you out of qualifying for a home entirely or a more expensive home. So going the conventional route saves a lot of money.
Talk to me. What's PMI?
That is what we call private mortgage insurance. So most lenders or even sometimes the government, they're wanting you to be invested in the full cost of the property up to 20% of the price of the home. If you are not invested up to 20%, some of those percentages do vary. Then they put what they call PMI or private mortgage insurance in place, which just protects the lender. It does nothing for you, doesn't really serve you a whole lot of purpose. You're just paying for the other lender to make sure they insure if they lose money on your home, then they're protected, they're taken care of.
So yeah, can I jump in there? So
yes, please.
This conventional versus FHA, can y'all explain that a little bit more? And can you get a conventional loan? Like, what's the difference between the two? And can you get a conventional loan with less than 20% down if you get the PMI, or is it still you can't get a conventional loan?
I'll jump at it. Go ahead, please.
Mm-hmm. I want to make sure I open it up for everybody because I mean we're all throwing it up in there too.
I know he's flashing. Come on, Mr. Whitney, talk to us.
No, Miss Bree can handle it. I was saying, okay. Daryl, I'm looking at you.
Mr. Durrell.
The question was, can you get a conventional loan with less than 20% down?
If you get the PMI, or is it just that's a no-go and you always have to have 20% for a conventional loan?
It depends on the lender. Their HomePath is a Fannie Mae product. they also will let investors buy a home for 5% down. Because what it is HomePath has all of their properties. They hold the notes on them. So they don't care if you're an investor. So with that program, you can use 5% or 10% down. So the different lenders have different requirements, but as a general rule, 20% across the board, with the exception of some certain lenders and certain programs.
Mm.
So let me throw another scenario out here, because I think we're getting to what you're asking as well, Mr. Alfred. So, my income now it's $3,500, and the house is still $150,000. My credit score is still at that 620. I do not have $30,000 down. I just don't have it. So, from what you guys know, Bree, Mr. Durrell, do I just have to wait until I get 30,000, or is there anything else I can do based off of me having a little more income, so my debt to ratio wouldn't be bad? And I will let you know that my other bills are $1,300 a month.
What you can look into is a grant program. There are grant programs that can, first, you're your first time home buyer, I'm assuming. So with the grant program, a first time home buyer, you have to look and just do a Google search for those programs in Kansas City, because each city has those different requirements. Second of all, is a gift letter. A relative has the money for you. You can get a gift letter from the relative for the extra money that you do not have. Okay. And the grant letter is just literally just that, a letter saying this is a gift to you. So it's not going to count in your income to debt ratio.
That's
And I'm
good.
sure your
Thank you.
mortgage lender wouldn't, in this scenario, your mortgage lender should probably try to transition you to a different product. Like Mr. Jordan said, you shouldn't be trying to squeeze into a conventional loan, maybe a FHA. FHA, you can do 3.5 down at 580 credit score, like Daryl said, depending on the lender, but usually you can do 580 credit score, middle score, 3.5 down, which is more feasible than trying to come up with 30%. But the scenario you gave, the debt to income ratio is still very high. It's about 67%. So they still got to figure out how they can get rid of some debt.
Absolutely.
If you go to
So,
B of
no.
A, B of A also has a new program out with a 3% down. It's for disadvantaged buyers. It's a new program they just released. So that's a 3% down.
Excellent. Miss Bree, you have a thought?
So just to kind of piggyback off of everything everyone said, because it's very accurate. Mr. Darrell, I didn't even know about the home path thing, so I'm gonna have to definitely look into that program. The Google searching is absolutely helpful. I know for me, sometimes I can get a little overwhelmed. So one thing I do share with folks is it's not a painful conversation to talk to us as professionals. We have the information, we have the resources, and I'm speaking a little bit broadly, but I'm quite sure that we are excited to provide it to you. So it's going and talking to folks and making sure that you're having the appropriate conversations, because if we have that resource and it keeps you from being discouraged from pursuing the possibility, even if you're not ready, still talking to someone and starting those steps and kind of seeing what you have to do to get to the end goal is important. Like what Mr. Whitney said, most lenders, if you have that conversation with them, they're going to take your information and they're going to plug and play and figure out which program you're going to best fit in. And even if you don't fit in any of those, then they do have I'm sure Mr. Whitney does this as well, just for, with his business, that they'll plug you into like a credit simulator and they'll figure out what it is that you may have to do and in what time frame to make sure those things do happen, or that they need to happen in order for you to reach your end goal. So it's just, the whole thing is just to encourage folks to have the conversation, ask the questions, meet it with the professionals, because we're here to help. Don't discourage yourself.
Get in position to make it happen, because I want my house. Yes. I want my house.
Yeah, I'm definitely want to jump in there, because that's exactly what I'm doing. We are thinking about making a move ourselves, and I'll set up an appointment for tomorrow to talk to a person who's in mortgage lending to figure out, since I'm, working for myself now, right? And also I have a house with a little bit of a loan on it that I'm about to pay off, and then We living in my wife's house, and we got all this, all this kind of stuff going on. So I want to figure out what are all the things that you want to see on the credit report or the debt to income ratio and all that before we even start looking for a house.
And that's the
Absolutely.
idea right there. It's just
Yeah,
getting
that's
the
what she said.
information. It's free. If someone can tell you how to do it, they give you a roadmap to say, hey, boom, 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 boom. No brainer. Mr. Whitney, I know you do that all the time.
So they're measuring risk, and there's people who have high credit scores who sometimes can't get approved depending on what's their credit on their credit report. So for you, Mr. Jordan, you're going to have to consider, do you have any recent late payments on your credit report? That's going to, heavily factor in. Do you have any bankruptcies, any repossessions, collections, charged off credit cards, things like that? Those are the factors they're probably going to look at first, and mortgage lenders typically going to want you to pay some of those items off if you have some collections and things like that. Daryl can correct me, but I know medical bills don't play as much of a factor as much as anymore in terms of your debt to income ratio. A lot of those items, even if you have some of those items I mentioned, sometimes you can do a letter of explanation to the underwriter. So someone like Daryl, he's like the person in between. He's going to try to make your financial profile look the best as best as possible to the underwriter, so they can actually provide you a mortgage loan. So your income, your debt to income ratio, your credit. If you've previously owned a home, what was your performance on that? If you have a spotless record, then that's going to help. But that's pretty much it. So traditionally, mortgage lenders, they're going to be able to help you themselves if you're just a person who just needs to pay down some credit card debt, right? But if you have a lot more going on in your credit profile that needs to be rectified, that's when they send you to someone like me. So the smart ones, at least, they build a pipeline of leads, a pipeline of buyers, and I build that pipeline for them. So when they're ready to buy, I say, hey, Daryl, this person's ready to buy. And then that lead that they probably would have just threw in the trash can, like some realtors and some mortgage lenders do. Not something that Bree does, right? But some people, they just say, oh, you're not pre-qualified, then I can't talk to you. But the smart ones, they build a pipeline of people who are ready to buy. So then they come right back to them when they're ready to buy. And that heightens that everybody wins in that scenario.
Everybody wins. Yes,
a couple of other things too. For multiple properties that you have, if you've got them leased out, we can take that lease and it reduces your income to debt ratio because that's more money to the party basically, and it covers that mortgage on that particular property. Another thing that they can do is you're self-employed. If you're self-employed for 2 years, you're typically good. If you go from W-2 to self-employed and it's only 1 year, we got a problem. They typically want to see you as a self-employed for 2 years to make sure that you're like it and you're going to stay as a self-employed. Now going from W-2 to W-2, you know what I mean? If you go W-2, self-employed back to W-2, not a problem. So we're going to look at that file in a couple of different ways, but the most important thing is you have other properties and you can prove a lease. So that's covering that mortgage. We don't have to include that in the income to debt ratio. The other thing I want to put out there too is every lender, if they don't have a product in their portfolio, they might not tell you about it. So if a lender tells you no, there are other places that you can go that might have a product that fits your particular file, like the NACA program, for example, FHA, the B of A program. But it's going to take some due diligence and research on your part because that lender you went to, they don't offer those products. So when I say that to say, if you get a no, don't get discouraged. Just continue to talk and meet other people and research.
Go
Thank
shopping.
you, Mr. Johnson. We checking boxes. I'm liking what you're saying. We checking some boxes there.
I didn't know I was underwriting the file tonight.
And the great thing is Miss Bree, as Miss Bree is a realtor and other realtors, they also should definitely, going back to them, because often you're hoping that your realtor has a couple of lenders they can at least tell you about or whatever. And then from there, if those lenders are saying no, you go back to your realtor and say, okay, it's not working. Because then you've got really somebody. Remember, the incentive for the realtor to sell you the house, because you're not paying him or her up front. They want to sell you a house or help you sell your house. So, they're going to be coming back to say, okay, what else can we do? What else can we do? So go back and talk to Bree or whoever your realtor is. I'm talking to everybody that's watching us. We're trying to not only talk to ourselves, but we're using our own examples, of kind of what's happening to kind of make it as real. And so that's why the scenario we thought would be kind of cool. Miss Bree, give us a thought. I see you're ready.
I mean, yes, ma'am. That I had a scenario that actually just happened. I'm looking at my list of people now, and there was one family that I did send them to one realtor, or not, excuse me, one lender. And it just was not a mesh. It was not, it did not align with how I handle my business. So they did come back to me, and then they gave me another chance. It did not reflect very well on me because I thought the lender was, legit, but it's fine. So I then made sure that I got them in contact with another lender, and I set that proper expectation on how you need to handle this client. So sometimes just not necessarily having to go and find that information yourself is helpful. Just using your resources is important. I'm here. She says, I want to be here.
It's less frustrating to me because I want my house, so. Oh, excellent. I was telling Miss Bree the reason this whole deposit thing came up. I had something happen with my dad, just different things were happening. And so some of the dollars that I had that were saved, I had to do things with them, help going to see my dad pretty much every weekend when he got kind of surgery and all that. So when I'm doing my loan app, because I am doing my loan app to get a house. So they kept saying, okay, well, what's in this bank account, this bank account? So I was like, well, what does that matter? I've got credit, I've got job and income. And so it got me to thinking that I've got to have a deposit depending on. So I told Bree, because they kind of kept asking me, I'm like, then I might as well just stop looking. And that's really what I said to myself. And she's like, well, no, because they have products. That's how we came up with this conversation, because it was important for me to not get frustrated because I'm thinking about conventional. I keep hearing people talk about conventional, so I'm thinking I'm going to have to have this money. So I didn't really even know really about all the other ones that Ms. Bree has shared with me, and then you guys have also shared some today with our listeners. That there are many options out there for us, and so the other piece, and I've sent a couple of you this article that I was reading for our news piece. I was reading this article that talked about that, that's often people, and I know it talks about Black people, but I'm gonna say just people, they often can have good credit, they can even have some down payment, they can have a good work history, but they still aren't able to get the amount of house they want because they don't have enough income. And that is that income to debt ratio. I know what we were talking about. I mean, they're paying their bills, they're doing all of that, but they still really just don't have enough. And so with those individuals, I wanted to talk a little bit about how do we, at least from our own perspective, or friends we know, what advice do we give people? It's like you've been on your job for a long time, you paid your bills, you've got good credit, but you're ready to buy something, and what you need, if you do the mortgage calculator or other things, it says you just really can't afford that. That's frustrating. So Bree and I were talking, and we love more feedback of what else do we do? And I know we heard about some grant programs. It made me also think about, often there's a lot of these agencies that are giving small business owners loans and credits, to be able to do their businesses. And I haven't heard a lot of them for houses anymore, but the grant program could be it. But I don't know. So what do we tell people to help them to go get some more money?
First thing I would encourage is a part-time job, because we can use that W-2 income typically right away. Some lenders might have a 3 months or 6 months where they have to have it for that amount of time. A lot of them will take that money and use it right away, and that's going to bring your income to debt ratio down.
Well,
Mr.
how do
Whitney?
they look at like gig income? Like you were talking about, if you self-employed, it has to be for 2 years. If somebody is out there in the gig economy, or they, have a side hustle that they're bringing in money and they can show it in the bank, do they have to have that for a certain amount of time, or how does that even fit into the picture?
1099 self-employed. So
Mm-hmm.
2 years.
Two
Yeah,
years,
2 years.
gotcha.
Yeah.
And another option is maybe you need to have some flexibility on your expectations. Maybe you can't afford that 150 house right now. Maybe a 120 house in a different area of town might be just as big. Our house, if we got our house, we live in the Parkville area. If we got our house in some parts of Johnson County, it may cost $30,000-$40,000 more than it does here, but it's the same exact house. So that's when you put Miss Bree to work and say, hey, what other houses are out there?
Well, I was gonna say because Parkville's a really good, awesome, it's an awesome area, and people
Uh,
clamoring over each other to get there. So,
That's
And Miss
hilarious.
Bree,
but
I know you've been showing this week, and especially with all the sunshine. Again, everything was happening. I'm like, are you out showing people how? What are you doing in general? Because last week we did talk about that sometimes the whole piece of the goal, whether it's the goal of having to get a deposit, for your house, or let's just say you get the house, you get it, and you're there. Do you have money for furniture? Do you have money for maintenance? Hopefully, you got a warranty. I mean, there's all those things to think about. And so sometimes like buying a car, it's so pretty and shiny. You just like, I want it, and you get it, and it's kind of slowing down and counting up the costs. What they're gonna take to maintain, this piece. And we part of that saving and investing, living below our means a little bit, like Mr. Whitney said, we don't have to have that big piece. We really don't. And if we need that big piece, maybe we go look somewhere else, maybe just thinking about it, writing it out, really planning it. Yes, Mr. Durrell, please.
Oh, I was just gonna just back into when you said warranty. So for our listeners, you can get a home warranty because it can be scary to think if something breaks in your house and you don't know how to fix it or have a plumber or electrician. You can get a home warranty on your house. So what that looks like is a payment monthly, maybe $50, and maybe a $50 deductible. You make one phone call to the home warranty company and let them know, hey, the electricity is not working in the bathroom, the tub is stopped up. They find the tradesman to come into your house to fix it. So you're not left up to yourself to try to find a plumber or electrician or anything like that. That home warranty is worth its weight in gold because it's peace of mind, especially your first time to buy a house.
Ms. Bree?
Just to piggyback a bit off of Mr. Darrell there, yes, home warranties are spot on. I even have clients that have investment properties that use the home warranties.
Mm-hmm.
So maybe not right off are you able to budget in a property management company. If you do have that home warranty in place and something does happen, your tenant contacts you, you contact the home warranty company, and again, they send that tradesman out and they take care of it. So like that's even something helpful for the investment. And then to go back with Mr. Whitney, one thing that I have been really talking a lot about with my buyers now is like the stair step real estate. Not necessarily right off can you get the $300,000 house, right? But maybe you can get the 120. You get the 120, you make the payments on it, you break down or you tear it, or oh my gosh, you build the equity in the property. And then over a period of time, between 3 to 5 years, you can take that property, either, put it on a conventional loan, get the income off of it for the lease, or you can sell it and use the proceeds to now purchase your next home and just continue to move in that direction until you do ultimately get a home that you want. I mean, that's what a lot of our parents did back in the day. They bought the smaller home where you hear the stories. We had 9 brothers and sisters in one bedroom and everyone ate at a table with only 5 chairs. And, like starting from somewhere is important because you're investing in your own future, not investing in someone else's investment.
And I just remembered something, not having enough income for the down payment. You can look into your 401k. Your 401k typically has a clause in there that for your primary home, you can take a loan out against your 401k to purchase your primary residence and then pay that 401k back. So that's where you can additionally look for some additional income too with your 401k loan. That's how I bought my first condo. So I bought it for my 401k.
He said his first
KUAW.
condo, y'all. Y'all heard it? Yeah.
Yeah, that was a slight flex. That was a slight flex. We
I
bought
heard it. Like, he said his condo.
we bought our first home with we pulled from our 401k as well.
Yeah.
I believe it was a good investment because that's going to come back in more.
100%.
And so that makes me think about for a second, as we talk about, the 401ks, if you're entrepreneur, 1099, stuff like that, thinking early enough, as soon as you can, if you don't, no company has a 401k, you can kind of create your own IRAs, stuff like that, so that you're still being able to have a way of saving dollars, automatic out of your self-pay, so that you're building money for, and I don't want to say it's a rainy day fund, because really you're planning this. It's a goal and you're saving for that, but it's being able to put it there so that it can do that. Mr. Whitney, go ahead, please.
Oh, no, I was going to say, I mean, it's also tax season and a lot of people are getting their tax returns. So, save it, get away from the Jordans and the other stuff and save for a house.
Yes. Save for a house. Save for a house. I would tell Ms. Bree we have to say things multiple times. Everyone we talk to, they say if you say it multiple times, people hear, and because that's what we're trying to do. So no, this is good. No, I appreciate this scenario, because it let us all kind of share some of our thoughts. Because the other piece, as we think about for Women's Month, I think we talked a couple of weeks ago that they were saying that Black women, they have been the largest growth entrepreneur during this pandemic, and some before, but definitely, thank you, but during the pandemic. But the challenge was that even though women, they are owning the businesses, sometimes they don't have enough dollars to do marketing and some of the other products to make their businesses grow even more, because they don't have collateral that the bank will accept to give them a business loan. So we went back and talked about the more that we can help make sure that we're helping to build more and more homeowners. Again, not to be the big one, it could be a starter, so you can get some equity in it. You can use it for collateral for a business loan, but also just for education, other stuff. But again, investing in type of educational funds if you can, so that it can be tax deductible. Or at least you don't have to count it on your taxes. Is that right, Mr. Whitney? Because you smile, so I'm not a tax person. So I think the tax season is here. So
I just smiled, Miss Valencia, because that was like the perfect layup to talk about business credit in terms of establishing credit in your business's EIN number, as opposed to getting frustrated applying at traditional banks and lenders, kind of cold turkey, trying to get funding when your business is not fundable. So that's kind of what me and Daryl focus on, is helping businesses become fundable so that your business can stand on its own outside of you. Let's separate you from the business, or separate your personal finances, your personal credit, so the business can be a financial guarantor with you and pay for that advertising and marketing and gas or whatever expenses you have for the business. So Google business credit, look into business credit, look up Mr. Daryl, myself, and it's another option. Walmart, Amazon, all your favorite companies have business credit, and they use it all the time.
And we should too. That's what you're saying. We should have it too. All of us.
It's a great equalizer.
All of us.
It's a necessary tool. Yep. It's a necessary tool in every business owner's toolbox to grow and scale their businesses, to access that credit.
To make it happen. And so it makes me think about, I'm going to come back to Mr. Whitney. He shared with me today, and I really thank you a lot. There's an empowerment, conference coming up for women, but there's a men's side too. And so I didn't look for that one much, but there's two things happening. Yes, she can, for 2023. And it is this Saturday, the 11th. And I registered because it's really talking about financial fitness again. I mean, for women, men, women for sure, but tell us a little bit more, whatever and then we'll kind of share a link later right after the show.
Oh yeah, we're not going to talk about the men, whatever about them. It's about the women. This is Yes She Can 2023 Financially Fit Conference. So they're the CEO of a company, a fintech company that I'm a part of. I'm a senior consultant with this company. Her name is Miss Sinead McCambry. She's the CEO of the whole company, COO, excuse me. And she's coming to Kansas City, right? They're based out of Conyers, Georgia, which is right outside of Atlanta. This event is taking place this Saturday. So it's just talking about a lot of the things that we're talking about now: how to build a profitable business, how to budget, how to pay off debt, how to be financially free. And also, I joke with Daryl. We always say, fire your boss and give it back to the economy. So if that's what you want to do, she's talking about those types of things. So this Saturday, it's at the Word Church in Kansas City, Kansas, and I can get you guys the link and everything like that. But it's a great event coming on. This is This is not a fortune. Inc. 5000 company, so a company that is growing very high, very quickly, very highly. A plus with the Better Business Bureau, one of the top 50 innovative companies in the nation, and it's a Black-owned company, a family-oriented company. And they're coming here. They want to build their footprint in Kansas City. So it's an awesome event. It's free. To learn
It's
more.
free.
It's
I
free.
registered. It's free.
I want the link.
Can y'all put it in the comments? Can you put the link in the comments?
Yes.
Yes.
All right, cool. And I guess while we on that, anybody watching, please, hit the like button for us as well.
Yes.
Leave a
Thank
comment
you, Mr.
on
Jordan.
things
Thank
that
you,
you want to hear and what you think about the show.
Yes, like what's
Like,
happening?
comment, subscribe.
Yes. I know. Sorry.
And subscribe.
That brings
Thank you,
us
sir.
back to Mr.
Thank you, sir.
Walker. Please, our awesome our announcing team, talk to us, remind us who we're with today. What's our platform?
All right. You're listening to KUAW Radio, Kansas City's global community radio station, and you can pick us up on Facebook, YouTube, Twitter, and Twitch. And the audio broadcast is on Get Me Radio and tune in. And if you have a smart speaker like a Google or Amazon, tell it to play KUAW Radio, and we'll be right there. So KUAW Radio, 24 hours a day, Kansas City's global community radio station.
I have a question. When you say, Mr. Walker, the smart speaker, is that when you say like Siri play something? Is that what you mean?
Yes, you can get it to play it right on that. Also, if you have Roku, we're on Roku also.
Excellent. Thank you, Mr. Whitney. Thank you, Mr. Walker. Thank you, Mr. Whitney. You all, everyone, he's put that in the chat. We're also gonna send out the link to. We have a Zoom financial empowerment team that we used to do Saturdays with. We're gonna put it there as well. We're gonna send it to as people as we can. We're going to text it. You guys, we've got like powerhouse people coming to our city. We have a new airport. We got all this stuff going on. NFL draft happening. People are coming here. So we got to support us. Please, let's support us and get out there and show love, like show Kansas City love. And Mr. Whitney, you're a part of that, entity in some way. So we want to support you as we support them, because you're sharing that with us. So it's pretty exciting stuff. Okay, so yes, please go ahead, Mr. Durham.
I just want to put this out there to everyone to see how this sounds. Basically, you got the house, now what? Because we know life happens. So your loss of job, divorce. What do you do in those circumstances to protect your home? What options do you have? So maybe we can talk about that. I don't know if the audience will be interested in that, because life does happen.
Yes.
It might put you in a short sale position or a foreclosure position. It's not the end of the world, but let's talk through what that process looks like.
Absolutely. It's interesting, during the 2008, 2009, a little bit of 2010 financial and housing crisis, I stopped at least like 65 foreclosures. A huge part of my practice at that time went into stopping them, and not just modifications, but actually stopping them, going to court, because the biggest problem was that people wouldn't open the mail. And so I did all these seminars of just telling people, go ahead and open the mail. Whatever it says, we can work with it. But everyone was scared. And so they're coming, they're crying, and sometimes it really is too late. But like we said last week, the banks don't want your house and cars for real. They just want you to pay. So we gotta, figure out. A lot of people lost their jobs and stuff, and so and there were a lot of those subprime loans. Remember, so a lot of people really, during that time they called all those arms due, and a ton of people that just couldn't afford anymore. Payments tripled and stuff like that. So biggest thing, like just call somebody. I mean, call a family member, call somebody, because people get depressed and stuff and they just don't do anything. But other thoughts you're having, Gerald, talk. But Mr. Alfred, and then we'll come back to
Well,
Mr.
just on arms, just wanted to explain a little bit about
Yes.
that, the adjustable rate mortgage, and I know those are coming back into favor a little bit more currently. And I don't know exactly how it works. I don't know if it can be 1 or 2 years or if it has to be 5 years, but the rate can potentially go up. I don't know if it ever goes down, but I know it can go up. So
Yeah, typically start out with 1 year. A loan broker would do a 1 year to get the payment down lower, and then it'll reset after 1 year. They got 1 year, 2 year, 5 years. Depends on that loan officer how they structure the deal. But you are right; they are coming back.
Yep.
And just know that when that arm resets, you got to refinance into a different product, a fixed product.
So let's talk about that for a second. The refinancing to a mixed product, it comes back normally income or the credit. Something was happening to where we had to move to that arm. So Mr. Whitney, talk with us about that a little bit, or Mr. Drew, tell us some thoughts with that, please.
Well,
Loan officers.
Yeah, go ahead, Daryl.
Oh no, I was just saying loan officers will use that arm because it gets them in the door to lower payment. So if they can't quite afford, they can't quite afford the house, they'll do an arm because typically the rate's lower, and then they can get in the house, and then with the ideal in mind to refinance to a fixed payment before it resets. But sometimes the homeowner doesn't understand that 100%, and they'll get there and it's resetting and it's just jumped up 100, 500, whatever the numbers are on their mortgage payment. So you really have to kind of understand your product that loan officer is putting you in. And that's easier said than done because this is something outside of the norm for homeowners to understand the lending.
Let me share a thought with you, because I don't disagree with the way that it should go. One of the reasons we won so many of those, overturning those foreclosures then, is because we were able to see the documentation where the lenders were clearly just getting people into the loans, and the realtors were doing it too. I mean, we had to sue people, they were basically trying to sell stuff, knowing people could not afford this stuff. I mean, that subprime lending, it was a mess. It actually caused that whole crash. And so I know there's a lot more regulation now to make sure that lenders are not trying to force people into stuff that they don't know. Because most people, if you say you can pay interest only for 1 year and the regular payment would be, $2,700, but you're only paying $800. I mean, it's like, they couldn't afford that. There ain't no job coming up that quick, or a pay raise. So we were able to prove for almost all of those that they really just didn't tell people. They were just trying to get some money. And why? Because of subprime lending, they weren't the banks. Sometimes they could be fly by nights. It was a lot of crazy stuff. I just want to
Yeah, I piggyback off that. I was doing short sales and foreclosures. A lot of times people got free houses because what happened is when that loan is sold, the original contracts, paperwork is supposed to go to the new lender, but they were turning so fast and being sold so fast that the paperwork documentation was getting lost.
You're right.
So a good attorney comes in and says, hey, where's the contract? That lender can't provide it. Okay, the homeowner got a free house.
They're trying to foreclose off having no paperwork. I'm like,
exactly.
You can't send in letters.
Exactly. It's the equity. Exactly. Yeah, because where's the contract? Well, it got sold 20 times. It got lost in the shuffle.
Yeah.
But the bad part for the homeowners is that they do have foreclosures that were started on their credit now. So we still had to, we couldn't erase everything because some of it, you need to read that stack of mortgage papers at some point. Somebody, we still got to be responsible. So I won't blame it all on the lenders, but thank you. Mr. Alfred, please.
I was just going to say another thing on the arm. I mean, just kind of like what we've been talking about is if you got caught in it like this year, this was a bad year because the rates went from 3% to 6%. So if you were banking on refinancing, you out of luck. I mean, I guess you can still get in a fix maybe, and that'll be helpful, but it would be a lot more. So.
One thing to be careful, what they're calling the program is a 2-for-1 buy down. So pretty much what they're doing is offer up an opportunity where you can even have the seller pay closing costs come through, buy down the interest rate for the first year. Then it increases by like 1.5% for the second year. And then that's when you get that spike. So they're trying to, I guess, figure that the interest rates will come down at some point, and then you can refinance in that. But it's one of those things where I'm telling my clients to be very careful because it's the same scenario.
Yeah, it's still a gamble.
Fancy name.
Mm-hmm.
You guys, this is good.
It's a gamble. It's also a gamble to pay rent for 20 years too.
Yeah, true. Yeah. True, that part.
Mm-hmm. Get some extra.
All right.
Go ahead.
I'm sure your landlord will send you a Christmas card, but yeah, even under those scenarios, get a house.
Yes. And let's start start checking it out, figuring out what you got to do to get, your starter and then more, etc. And then come to this Yes She Can conference this Saturday, March 11th. And we're going to, find other ways to get it out more too. And thank you, Mr. Whitney, because I'm excited. I want to go to stuff. And you guys, thank you all. We're going to be talking about reverse mortgages in a couple of weeks. We're going to have Mr. Durrell and Mr. Brian Ross. They're going to be helping to talk a lot about that for like what to do with it, investment, but we all will talk. And so remember, everyone, you're all invited to always come back and talk to us. And everyone's always invited to come and watch us on definitely every Monday night at 7 p.m. So that's all I got for now. You guys are amazing, and I'll see y'all very soon. Good night, Mr. Walker.
Good night. Thank you, Mr. Walker.
Bye.
Thank you guys so much. Bye-bye.